Ladies and gentlemen, please take your seats. We are starting in a few minutes, a few seconds. So welcome to Prague. My name is Josef Šíma. I'm professor here at the University of Economics in Prague. I'm an editorial director of the Liberální Institute of Prague, and I'm a president of this conference, Prague Conference on Political Economy. I'm excited to have an opportunity today to welcome you here in Prague, in the center of Europe, and hope that the 3 days of the conference will be a great intellectual adventure for all of us. PCPE, the Prague Conference on Political Economy, is organized since 2005 and has become a traditional annual meeting of scholars working in the tradition of the Austrian School of Economics and Austrian fields of social research. Simply, I'm glad to welcome here all of you who understand that economics is not a fancy playground for artificial model builders, but a science which deals with real people acting in the real world. It is a very practical science whose understanding is crucial for social development. As Ludwig von Mises states in his Human Action on the very last page of this wonderful book, the body of economic knowledge is the foundation upon which modern industrialism and all the moral, intellectual, technological, and therapeutical achievements of the last centuries have been built. It rests with man what will make the proper use of the rich treasure with which this knowledge provides them, or whether they will leave it unused. But if they fail to take the best advantage of it and disregard its teachings and warnings, they will not annul economics, they will stamp our society and the human race. End of quote. I'm very happy that social scientists from all over the world keep coming to this event organized jointly by the Faculty of Economics and Public Administration of the University of Economics and the Liberální Institut of Prague, which is the leading free market think tank in the whole of Europe, which actually is celebrating 20 years of its existence this year. This year we have here participants from more than a dozen countries, besides Czechs and Slovaks. We have here scholars from the United States, Great Britain, Germany, Spain, Belarus, Poland, Hungary, Romania, Belgium, if there is such a thing as Belgium, Turkey, etc., etc. Some of them distinguished full professors, some of them young assistant professors, some of them PhD students, graduate students, think tank people, businessmen, intellectuals. All of them, by being here, helping us to pursue our goal. This conference is an attempt to revive the tradition of critical thinking crossing boundaries of traditional disciplines. The tradition of broadly defined economics with its connection to law, political science, history, political philosophy. The tradition of Austrian economics and liberty-oriented thinking that thrived in Central Europe at the beginning of the 20th century, but sadly disappeared thereafter. For this reason, we set up 2 annual prizes called after 2 great scholars, Franz or František Cuhel and Friedrich von Wieser, whose lives are closely connected with the city of Prague. And this afternoon, the first day of our conference, will be devoted to the legacy of these two great men. Tomorrow's program will be much less of a celebration. We are having plenty of sessions and on wonderful topics, all held here in our new Paradise building. The third day of the conference will be held in downtown Prague in CEVRO Institut College, and will have a form of special session or workshop or debate, if you want, on economics and politics of transition with Professor Svetozar Pejovic, whom I'll introduce in a little while, and Dr. Tříska, an author of the concept of the Czech privatization. We expect an insightful debate with your contribution highlighting the lessons from your particular countries or fields of your particular interests. However, before we start with our today's program, our annual lectures, I want to express gratitude to my young colleagues who worked hard to make this event possible, particularly Pavel Minarik, director of PCPE 2009, and his team of his collaborator. So thank you guys for doing it, and I'm sure we'll see the result of your wonderful work in the coming days. And also, I would like to thank Dr. Jiří Schwartz, the Dean of the Faculty of Economics and Public Administration, for his continual support of this project. And I'd like to invite Dr. Schwartz to the podium to officially open the 2009 Prague Conference on Political Economy.
Thank you very much for this applause for my colleague Josef Šíma. It's a great pleasure to have you here. It's a great pleasure to have so many participants. So I am really very honored by participation of foreigners here, because it's a real evaluation of our effort to organize such a huge conference for you, and also for Faculty of Economics, because this conference really contributes to increasing reputation of this faculty. So I'm also very happy about our laureates, Professor Hans-Hermann Hoppe and Professor Steve Pejovic, because the cooperation with those two famous professors of economics started 20 years ago, just very close to Velvet Revolution. Professor Hoppe was really intellectually affected a lot of fellows of Liberální Institute, and so I am very grateful for that. And I appreciate his intellectual work very highly. Professor Pejovic, he participated in many discussions about transition in ex-communist countries. One of the reasons why he did that was his intellectual work on property rights theory, and also another aspect, and that he was born in former Yugoslavia, in Montenegro, and he understood what communism was about. He really affected and influenced Czech authors of our transition program, and there will be discussion, very detailed discussion about this topic on Sunday morning, and I am quite sure that a lot of you will participate in this discussion. My colleague Josef Šíma spoke about artificial models in economics, and we have plenty of them, and modern economics is flooded by these models. Nobody can imagine economics without such models. Now we are in a very special period of economic history, especially in the Czech Republic, because we don't have any special and any concrete experience with economic crisis in market economy. So under communism, so we lived in permanent crisis. And but after collapse of communism, there was a perpetual growth of our economy, and almost nobody could imagine that it can be something different. So now we are in this unique situation, and this unique situation is a real challenge for us, for professors of economics, because this situation also will prove the credibility of current models, of very popular models, and also credibility of many schools of economics. And I am quite sure that professors of economics at the Faculty of Economics and Public Administration will positively use this experience and will attract students to study economics, understand economics, because to understand economics, it also means to understand economic crisis. So I am sure you will enjoy these 2 days in Prague, and so I wish you all the best with your discussion, with presentation of your papers, and I hope to see many of you next year in our 6th Prague Conference on Political Economy. Thank you very much.
Thank you, Dr. Schwartz. Now, ladies and gentlemen, we can move to the first part of the program, which is the announcement of Franz Cuhel Memorial Prize. Franz Cuhel was a Czech economist who had been a member of Eugen von Böhm-Bawerk's seminar in the years before World War I. His book, Zur Lehre von den Bedürfnissen, is famous as a pioneering attempt at establishing the concept of ordinal rather than cardinal utility. This achievement was acknowledged by Ludwig von Mises in his great books, and then brought through the work of Lionel Robbins into the English-speaking economic world. For those who are interested to read more about Cuhel, please the next slide, and something by Cuhel himself, we produced a special Cuhel issue of the journal, which is an offspring of this conference, called New Perspectives on Political Economy. I'll be very happy as an editor of this journal to get submissions for that means your papers that either are presented here or actually any other paper within this sort of approach will be very much appreciated. It is my great pleasure to have here today Professor Hans-Hermann Hoppe as a recipient of 2009 František Cuhel Prize. Professor Hoppe is the foremost economist writing in the tradition of the Austrian School of Economics. He is the author of numerous books: A Theory of Capitalism and Socialism, The Ethics, Economics and Ethics of Private Property, Democracy, The God That Failed. He's also an editor of numerous books, including The Myth of National Defense. He authored numerous articles in areas of comparative economics, methodology of economics, and argumentative ethics. He has served as an editor of the Journal of Libertarian Studies and co-editor of the Quarterly Journal of Austrian Economics. In 2005, he founded the Property and Freedom Society, which meets annually in May in a marvelous facility in Bodrum, Turkey. Professor Hoppe, now please allow me to receive 2009 Cuhel Memorial Prize for Excellence in Economic Education.
Thank you, Professor Schima. Thank you, Professor Schwartz, for the nice invitation to come to Prague. As Professor Schima mentioned, Franz Cuhel occupies an honorary place in the history of economic thought, and in particular in the history of the Viennese or Austrian School of Economics. In his book, Zur Lehre von den Bedürfnissen, that is a theory of needs, which was published in 1907, Cuhel presented for the very first time a strictly ordinal interpretation of marginal utility, and he thereby contributed to a systematic advance of pure economic theory. And since this lecture is named in Cuhel's honor, I felt it appropriate that I, too, should discuss a purely theoretical problem of economics in my lecture. But my subject will not be the general theory of value, as Cuhel did, but more specifically, I want to talk about the theory of money. And as a title for my lecture, I have chosen a title similar to a famous article written by William Hutt, The Yield from Money Held. This article of Hutt's appeared in a Festschrift in honor of Ludwig von Mises in 1956. Like Hutt, I want to attack the following notion: that money held in cash balances and deposit accounts is somehow unproductive or barren or sterile and offers a yield of nil. That only consumer goods and producer goods or investment goods are productive of human welfare, and that the only productive use of money lies in its so-called circulation, that is, in its spending on consumer and producer goods, but that the holding of money, that is, the not spending of money, somehow diminishes future consumption and production. These are the ideas that I want to attack and show what is wrong with them. This view is extremely popular within the economics profession and also outside of the economics profession. Himself offers many examples of proponents of this view. I will only offer two examples in order to illustrate what the thesis is that I want to attack. The first example that I want to give is John Maynard Keynes. And I'll give you a famous quote from his general theory, which suffices for my purpose here. I quote Keynes. He says, "An act of individual saving," and I should mention by saving, Keynes means cash holding or hoarding instead of consumption. An act of individual saving means, so to speak, a decision not to have dinner today, but it does not necessitate a decision to have dinner or buy a pair of boots a week hence or a year hence, or to consume any specified thing at any specified date. Thus, it depresses the business of preparing today's dinner without stimulating the business of making ready for some future act of consumption. It is not a substitution of future consumption demand for present consumption demand. It is a net diminution of such demand. So let me emphasize again his point, that is, not spending is a diminution of the demand for consumer goods or producer goods now and in the future. Now, in this statement, the thesis that I want to attack is obviously contained. The holding of money, according to Keynes, that is, the not spending of it on either consumer goods or investment goods, is considered to be unproductive and indeed detrimental to human welfare. According to Keynes, the government or its central bank must create and then spend the money that savers, that is, the holders of cash balances, are unproductively holding back, so to speak, so as to stimulate both consumption and investment. Now, it is almost needless to say that this is precisely what governments and central banks are presently doing to supposedly rectify the current economic crisis. That is, spending the money that private individuals are holding back to the detriment of human welfare. The second example of people holding this view that cash balances have a yield of nil is closer from home, that is from some proponents of free banking, of members of the Austrian School, such as Lawrence White, George Selgin, and Roger Garrison. According to them, an unanticipated increase in the demand for money, quote, pushes the economy below its potential and requires a compensating money spending injection from the banking system. So here we have an excess demand for money, quote, excess demand for money, a very unusual thing to say. An excess demand for TV, an excess demand for cars. They refer to it as an excess demand for money, has no positive yield or is even detrimental. Hence, help is needed. For the free bankers, help is not supposed to come from the government and its central bank, but from a system of freely competing fractional reserve banks. However, the idea involved here is exactly the same as in Keynes. That is, the holding of some, the so-called excess money, is unproductive and requires some sort of remedy. Now, I do not want to engage in a textual critique of Keynes or the free bankers here. I only mentioned them to further elucidate the idea that I want to attack and to indicate how widespread and consequential its acceptance is within the economics profession, both inside and outside of Keynesian circles. Unlike Hutt, who proceeds in his article in a critical fashion that is, through a textual examination of various authors, and arrives at his own contrary views of the positive yield from money held in a rather indirect and circumstantial way, I want to proceed apodictically. That is, by the way of a positive demonstration of money's unique productivity. I want to explain what productive contribution is made by money that is held in cash balances. Now, the first natural response to the thesis that money held in or added to cash balances is unproductive is simply to ask or to counter why then, if money held in or added to cash balances is unproductive of human welfare, why, if that is the case, do people actually hold money and add something to cash balances? If cash holdings are indeed good for nothing, no one would hold or add to them. And yet, almost everyone does so all the time. And since all money is always held or hoarded by someone, because when money allegedly circulates, it only leaves one holding hand in order to get into another holding hand. So all money is always held in cash balances. And since money is always held in cash balances, money must obviously be continuously good for something, all the while that it is being held, and that is always. Now, to understand what this good for something of money is, it is best to ask when or under what conditions would there be no demand for cash holdings. Now, interestingly, there exists wide agreement within the economics profession on the answer to this question. It has been most lucidly stated by Ludwig von Mises. No money and no demand for cash balances would exist in general equilibrium, or as Mises calls it, within the imaginary construction of an evenly rotating economy. In this construction, all uncertainty is by assumption removed from human action. Everyone knows precisely the terms, the times, and the location of every future action, and accordingly, all exchanges can be prearranged and take the form of direct exchanges. As Mises writes, quote, "In a system without change, in which there is no uncertainty whatsoever about the future, nobody needs to hold cash. Every individual knows precisely what amount of money he needs at any future date. He is therefore in a position to lend all the funds he receives in such a way that the loans fall due on the date he will need them." Now, based on this fundamental insight, we can state as a first provisional conclusion regarding the positive theory of money that money and cash balances would disappear with the disappearance of uncertainty, and that is, of course, never. And mutatis mutandis, that the investment in money balances must be conceived of as an investment in certainty, or investment in the reduction of subjectively felt uneasiness about uncertainty. This will become clearer. In reality, outside of the imaginary construction of an evenly rotating economy, uncertainty exists. The terms, the times, and the locations of all future actions and exchanges cannot be predicted perfectly or with certitude. Action is by nature speculative and subject to error. Presently unpredictable surprises can occur. Whenever double coincidences of wants between pairs of prospective buyers and sellers are absent, for instance, that is, when one does not want the other has to sell or vice versa, any direct change, direct trade becomes impossible. Faced with this challenge of unpredictable contingencies, men can come to value goods on account of their degree of marketability, rather than on their use value for him as a consumer or producer good. And he can then consider trading also whenever a good to be acquired is more marketable than the good to be surrendered, such that the position of a more marketable good would facilitate the future acquisition of other directly or indirectly serviceable goods or services. That is, the demand for media of exchange can arise. That is, a demand for goods valued on account of their marketability or resaleability. And since a more easily and more widely resaleable good is preferable to a less easily and less widely saleable good as a medium of exchange, there would be, as Mises writes, there would be an inevitable tendency for the less marketable of a series of goods used as a media of exchange to be one by one rejected, until at last only a single commodity remained, which was universally employed as a medium of exchange, in a word, money. Now, while this brief reconstruction of the origin of money is familiar, insufficient attention has been drawn to the fact that as the most easily and widely saleable good, money is at the same time the most universally present or instantly serviceable good, which is incidentally why the interest rate, that is the discount rate of future goods against present goods, is also expressed in terms of money. And as the most universally present or instantly serviceable good, that is the good that is, then it is also a good that is uniquely suited to alleviate presently felt uneasiness about uncertainty, because money can be employed for the instant satisfaction of the widest range of possible needs. It provides its owner with the best humanly possible protection against uncertainty. In holding money, its owner gains in the satisfaction of being able to meet instantly, as they unpredictably arise, the widest range of future contingencies. The investment in cash balances is an investment contra or against the subjectively felt aversion to uncertainty. A larger cash balance brings more relief from uncertainty aversion. Now, the term uncertainty aversion is meant here in its technical sense, as opposed to risk aversion. The categorical distinction between uncertainty on the one hand and risk on the other has been introduced into economics by Frank Knight. And it has been further elaborated on by Ludwig von Mises with his distinction between case probability and class probability. Class probability being the same as risk, and case probability being the same as uncertainty in the Knightian sense. Now, risks, that is, instances of class probability, are contingencies against which it is possible to take out insurance, because objective long-run probability distributions concerning all possible outcomes are known and are predictable. We know nothing about an individual outcome, but we know everything about the whole class of events, and we are insofar certain about the future. Insofar as a man faces a risky future, he does not need to hold cash. To satisfy his desire to be protected against risk, he can buy or produce insurance. The sum of money that he spends on insurance is an indication of the height of his aversion against risk. Insurance premiums are money spent, not money held, and are as such invested in the physical production structure of producer and consumer goods. The payment of insurance reflects a man's subjectively felt certainty concerning predictable future contingencies, namely risks. In distinct contrast, insofar as man faces uncertainty, he is quite literally not certain concerning future contingencies. That is, as to what he might want or need and when he might want or need what. In order to be protected against unpredictable contingencies at unpredictable moments, he cannot invest in producer goods, as in the case of risk insurance. For such investments, that is, investments in producer goods, reflect his certainty concerning particular future needs. Only present and instantly serviceable goods can protect against unpredictable contingencies or uncertain events. Nor does a man want to invest in consumer goods for uncertainty protection, because an investment in consumer goods too is an expression of certainty concerning specific momentary or immediately impending wants. Only money, on account of its instant and unspecific wide-ranging salability, can protect him against uncertain events. Thus, just as insurance premiums are the price paid for protection against risk aversion, so cash holdings are the price paid for protection against uncertainty aversion. To the extent that a man feels certain regarding his future needs, he will invest in consumer or producer goods. To invest in money balances is to invest in neither consumer goods nor producer goods. Unlike consumer and producer goods, which are used up in consumption or production, money is neither used up through its use as a medium of exchange, nor is it transformed into another commodity. To invest in cash balances means I am uncertain about my present and future needs and believe that a balance of the most easily and widely saleable goods on hand will best prepare me to meet my as of yet unknown needs at as of yet unknown times. Now, if a person then adds to his cash balance, he does so because he is confronted with a situation of subjectively perceived increased uncertainty regarding his own future. The addition to his cash balance represents an investment in presently felt certainty vis-à-vis a future perceived as less certain. In order to add to his cash balance, a person must restrict his purchases or increase his sales of non-money goods, of producer or consumer goods. In either case, the outcome is an immediate fall in the price of certain non-money goods. As a result of restricting his purchase of X, Y, or Z, the money price of X, Y, or Z will be lowered as compared to what the price otherwise would have been, and likewise, by increasing his sales of A, B, or C, their prices will fall. The actor thus accomplishes exactly and immediately what he wants. He commands a larger, in this case, a larger nominal and real cash balance, and is better prepared for an increasingly uncertain future. The marginal utility of the added cash is higher than or ranks above the the marginal utility of the non-money goods sold or unbought. He is better off with more cash on hand and less non-money goods. Otherwise, he would not have reallocated his assets in this way. There is more investment in the removal of perceived uncertainty, and there is less investment in needs, present or future, that are considered as certain. The situation does not change if there is a general increase in the demand for money. That is, if all or most people try to increase their cash holdings in response to some perceived heightened uncertainty. With the total quantity of money given, the average size of cash holdings cannot increase, of course, nor is the total quantity of producer and consumer goods that make up the physical production structure affected by a general increase in the demand for money. It remains unchanged. In generally striving to increase the size of their cash holdings, however, the money prices of non-money goods will have to be bid downward, and the purchasing power per unit money will correspondingly rise. Thus, the increased demand for and the given supply of money are equilibrated again, but at a higher purchasing power per unit money and lower prices of non-money goods. That is, even if nominal cash balances cannot rise as a result of a general increase in the demand for money, the real value of cash balances can. And it is this increase in the value of real cash balances that brings about precisely and immediately the effect that a person desires, or the public in this case desired, namely of being better prepared for a future deemed as less certain. No one cares about the nominal number of money units in his possession. Rather, people want to keep cash with a definite amount of purchasing power on hand. If the purchasing power per unit money increases as a result of an increased demand for cash holdings, each unit of money confronted with an array of generally lower non-money prices can do a better job in affording its owner protection against perceived uncertainty. Now, this shall suffice as my attempt of providing a positive demonstration of the unique productivity of cash holdings as yielders of certainty in an uncertain world. Let me add only a brief additional comment concerning the present unprecedentedly severe economic crisis, consequences that our theoretical considerations imply for its solution. And to do this, I shall say nothing here about the cause of the present crisis, except that I consider it to be another actually spectacular vindication of the so-called Austrian or Mises-Hayek business cycle theory. In any case, the crisis has led to heightened uncertainty. People are worried. They do not know what the future will bring. People want more certainty vis-à-vis a future considered far less certain than before. Accordingly, their demand for cash increases. With the quantity of money given, higher demand for money can be satisfied only by bidding down non-money goods prices. Consequently, as the overall level of prices falls, the purchasing power per unit money rises. Each unit of money is productive now of more certainty, and the desired level of uncertainty production is restored, and in that case, the crisis would be over. The solution to the crisis suggested instead by most economists and pundits and officially adopted by governments everywhere is entirely different. It is motivated by the here criticized, fundamentally flawed doctrine that money held in or added to cash balances is money unproductively withheld from production and consumption. The additions to their cash holdings that people want to bring about are interpreted wrongly as a diminution of human welfare. Accordingly, huge efforts are currently undertaken to increase the amount of spending. But this stands at cross purposes with the general public's needs and desires. In order to be better protected against heightened perceived uncertainty, prices must fall and the purchasing power of a unit of money must rise. Yet, with an influx of additional, newly created money, prices will be higher and the purchasing power per unit money will be lower than otherwise would be the case. Accordingly, as a result of the current monetary policy, the restoration of the desired level of uncertainty protection will be delayed and the crisis will be prolonged. Thank you very much.
Thank you very much, Professor Hoppe. Now we're slightly changing the schedule, and I'd like to invite to the podium the organizers of the student essay and research contests to award prizes for best students in different categories. So, the organizers, I hope you are ready.
Ladies and gentlemen, dear students, first of all, I would like to say thank you to the organizers of the PCPE for allowing us to introduce you the winners of the student academic paper competition in frame of the conference. More than 44 students participated in 6 sections, which are divided into 3 categories in today's competition. Let me please invite the winners of the first section, Economic Theory and Application. The winners of this section are Matěj Marek in category Seminary Papers and Essays, Matěj Marek, and Jiří Lahvička in category Bachelor Thesis. Congratulations. The winners of the section Economics of the Environment and Natural Resources are Jakub Jakl in category Seminary Papers and Essays, Jakub Jakl. Kateřina Kaprová in category Bachelor Thesis, and Renata Hamšíková in category Diploma Thesis. In the third section, which is Economic Policy and Social Systems, has won Alexander Harand and Pavel Cechmeister in category Seminary Papers and Essays. They share the first place in this category together with Josef Stejkoza. In category Bachelor Thesis has won Jaroslava Macková. And Lukáš Dvořák is the winner of the category Diploma Thesis. Congratulations. The winners of the section Economic History are Zdeněk Mikeš in category Seminary Papers and Essays, Helena Lapská in category Bachelor Thesis, and Pavel Máder in category Diploma Thesis. In the section Importance and Reforms of Institutions has won Hanna Beránková in category Bachelor Thesis. She is the only winner in this section. And the winner of the last section, Regional Studies, Economics of Municipalities and Law, are Michal Vašák in category Seminary Papers and Essays, and Veronika Braunová in category Bachelor Thesis. Congratulations. My thanks belong not only to the winners, but also to the other participants that were brave enough and to apply in the competition. And I believe that all of you have enjoyed this day, and I hope to meet you here next week. Before I wish you a nice sunny weekend, let me please say final thank you to Dr. Stelner for organizing the competition. Have a nice weekend.
As all you can see, 30-minute refreshment break. We'll be here in 30 minutes to have Wieser Memorial Lecture recipient.